Interest rates holding higher for longer have the potential to bankrupt 35% of Canadians, according to the Daily Hive. But now, 2 years after that article was posted, consumer bankruptcies filed across Canada over the last 12 months have now totaled 26,550. And sure, that does sound like a very big number, but when compared to only 2 years ago, that number was 31,168. And the previous 12 months before that, or what I like to call the before times, bankruptcies filed were at a staggering 54,217. But bankruptcies currently being less than half of where they were at pre-pandemic levels, this must be a result of mortgage borrowers being allowed to amortize their mortgages out to as far as 47 years or more, according to the CBC. And that has the Financial Post telling Canadians to brace for the mortgage renewal cliff that could cause monthly mortgage payments to increase as much as 70%. After all, more than $715 billion worth of mortgages are set to renew in 2025 and 2026. And according to BMO Financial's chief economist, Doug Porter, it's this year, not 2025 or 2026. No, this year of 2024 that is the one to worry about. And recently on my podcast channel called The Tom Story Show, we recorded our 100th episode where we got a chance to pick Doug Porter's brain about, of course, housing. Now, that conversation was more than an hour long where we got to discuss macroeconomics, employment, Doug's personal influence on the Bank of and the Government of Canada, and so much more. But today, I wanted to show you his opinion of not only the market, but of the mortgage renewal crisis that is headed our way, and its effect on the possibility of 35% of Canadians going bankrupt, as per the Daily Hive clickbait article that got this channel over 200,000 views. So please subscribe if you would like to stay up to date on my market of Surrey and the Fraser Valley. Click the like button for most of us so far avoiding bankruptcy. And here's a clip from last week's episode of The Tom Story Show, which I have also linked down below in the description of this video. And I hope you will subscribe to the podcast as well. What do you think the next 12 months, 24 months, maybe 5 years? What is your outlook for the overall Canadian market? Is the end near for the mortgage renewal crisis, or is that all just going to wash out and we're going to have the soft landing like you kind of alluded to that we might be having at the beginning of the conversation?
So the one I would say thing we got wrong in the last couple of years on the real estate market is we actually thought it would have more of a correction than it ended up having, given the scale of the interest rate hike that we saw. We were looking for a peak to trough decline in national prices of closer to 25%. It never really fell as much as 20% from peak to trough. We had the right idea, but I would say that, the surprise to me is how resilient the market ended up being. And of course, we've had a completely different story across the country. You've got Calgary, who I liken to Secretariat, running away from the rest of the field. Their prices have actually gone up since the Bank of Canada started raising interest rates. Unbelievable. At the other end of the spectrum, you've had much of southwestern Ontario that absolutely boomed during the pandemic, has had a very serious correction, close to that 25% drop in price we were looking at. Toronto is somewhere in between. It's been a little bit weaker than the national average. It didn't quite boom like southwestern Ontario and parts of eastern Ontario. It's had a pretty serious correction, but it does look like it's starting to stabilize now. Then there are cities like Vancouver, Montreal, Halifax, and even Edmonton that, frankly, I will tell you, held up a lot better than I would have expected. They had a modest correction, but the kind of peak to trough declines we're talking about in prices were, depending on the city, something like 2 to 6%. That's trivial, given the near 5 percentage point rise in interest rates. And to me, that's the real surprise at how well those kind of cities just held in there. Looking ahead, I don't think, as I said, I don't think we're completely out of the woods. Around the turn of the year, late last year, early this year, we saw a nice bounce in sales in a lot of cities. The February numbers that have started to roll in are a little bit more cautious. Certainly in Toronto, we saw sales pull back a bit and listings really pick up. So the market's balanced again. We think, some people were talking about how the housing market was on fire after the January numbers. Well, that was a bit of an exaggeration. I mean, clearly, things were supported by the weirdly mild winter we had, and the hint that the Bank of Canada might start to cut interest rates. I think reality returned to the market in February. So our view is that we're basically looking at a stalemate through this year. We think, there is pent up demand, no question about it. We got this, force of very strong population growth, but I also think there's a lot of pent up sellers too, who've been waiting for, the market to firm a bit. And I think we sort of fight to a standstill this year where we don't see things deteriorate really, but we also don't see a marked pickup. I am constructive for 2025 though. I just think that the very intense population growth we're seeing and the amount of pent-up demand, and we'll probably look at a lower interest rate environment by 2025, probably means the market sees a full rebound when you get out into 2025. The other part of your question in terms of whether we're past the worst on the mortgage pay. So I've actually been of the view that, and a lot of our competitors have been talking about, watch out for the mortgage cliff in 2025 or 26. I'm not so worried about 25 and 26. I'm worried about this year. This is the year that rates are still at their peak. They're going to be there for a little bit while longer. We're seeing the unemployment rate gradually creep up. As I said, we're not completely out of the woods on the economic front. I actually think this is really the test case. This is the year that we have to get through. By 25 and 26, incomes will have risen more. Rates will be coming down, so people will have a little bit more, different options that they can deal with at that time. I actually think it's this year that's the real test, and we have started to see consumer insolvencies and bankruptcies, starting to creep up. I would say they've really just normalized, but they're probably going to go a bit higher in the next 6 months. So I personally believe that this is the test year, not 25, 26.
So there you have it. This year appears to be the one to worry about, according to Doug. And if we can make it out of 2024 without too much trouble, then wages will hopefully increase enough to offset the higher than 2021 payments, but now lower than 2023 rates. And ideally, 35% of Canadians will not end up going bankrupt after all. And Doug is of the opinion that 2025 might see yet another increase or rebound in real estate prices. Yeah, they could go up even more. Thank you for subscribing, checking out Doug's full interview on The Tom Story Show, link down below in the description. Click the like button, and we'll see you in a couple of days.